The Canadian dollar gained strength after the Federal Reserve signaled a more cautious policy outlook, rewarding investors who had anticipated a softer stance from the U.S. central bank. As expectations for aggressive U.S. rate hikes faded, the U.S. dollar weakened, allowing the Canadian dollar to appreciate against its American counterpart. The Canadian dollar often benefits when the U.S. dollar loses momentum, especially since the two economies are closely linked through trade and financial markets. In addition, stable oil prices have provided further support for the Canadian currency. As Canada is one of the world's largest energy exporters and higher energy revenues typically strengthen the Canadian dollar, markets are now shifting their attention to the Bank of Canada's next policy moves and upcoming economic data. If Canadian inflation and employment remain resilient while the Federal Reserve continues to signal a patient approach, the Canadian dollar could maintain its recent gains. However, weaker domestic data or a rebound in the US dollar could limit further upside. For Forex traders, the key events to watch are Bank of Canada policy meetings, Canadian inflation and employment reports, crude oil price movements, US inflation data, and Federal Reserve decisions. These factors will determine whether the Canadian dollar extends its rally or faces renewed pressure. Stay informed, manage your risk, and follow for more daily Forex market updates.